Yes, very much possible, Ayush. Good morning. That's what we are doing at Weekend Investing. We completely ignore news about companies and only take care of any red flags that are highlighted by exchanges or the regulator. Only those companies are out of our filter. Good morning, Viresh. So we have strategically moved to non-leveraged products only, and that's the reason why Stairs was stopped. Good morning. Thank you, Ganesh. Good morning, Aditya. Good morning, Karthik. Ravi Raj, good morning. Says talk about US investment. Sure, we'll do that. Good morning, Jitendra. Good morning, Ramneek. Good morning, Jay. Good morning, Kiran. Satyendra, Ayush, Sachin. Good morning. Good morning, Amit. Dhirendra. Mr. Hariharan. Good morning. Jojo, good morning. Manish. Bore Gowda ji, good morning. Good morning, Mr. Limai. Okay, let's wait another minute or so. Good morning, Vasudhar. Good morning, Manish, Ishan, Vipul, Octopus. Good morning from Kashmir. Cash in with Chetan. Good morning. Ayush. Good morning. Yogin. Good morning. Viswajit Biswas. Good morning, sir. Very nice to see all of you this morning. In Delhi, it is reasonably cold. I'm not sure at your places, but let's get started. Yeah. So today is the monthly live session, and the format of this meet will remain similar to what we did in the past. I'll talk about the markets a bit, and then we'll go to questions. Maybe 10 minutes of uh, market overview, and then we'll jump into questions. And today, sharply at noon, I will be exiting. I have some engagement to go to, and hence this time restriction is very strict today. Uh, okay, Mysore is also cold, I'm told. Great. So let's look at the markets. So I hope everybody can see my screen. So this is where we are in terms of the Nifty. We have spent a good 3.5 months in this down move. The Nifty has breached the 200 DMA. This is the 200 DMA a few times, and now it is decisively below that. So definitely, the bulls have taken a back seat. The fact also is that despite this first move, which ended in November mid, we have not yet been able to take out this low. It may happen in the next few weeks if it does, or we may make a double bottom here and move up from here. That does not mean that we may go up exponentially from here, but it may so happen that we may respect this bottom and bounce again towards maybe this high or this high until we have more clarity in terms of how the flows are happening. The the RSI, the indicator that can show us whether markets are oversold or overbought, is not yet oversold. So there is room for more downside, but it is also sort of diverging from this trend a little bit so far. The fierceness of the fall, which was here in this period, is not yet there here. So while the markets are slipping, the fierceness of the fall is reducing. In fact, the weakest sectors like FMCG uh, or even uh, public sector banks, they are not really falling like nine pins. They're slipping, but FMCG right now is actually outperforming the market in the last week or so. So there is hope that this bottom may be one key area where the market may consolidate for some more time till there is more clarity and market sort of has more uh, tailwind to go up. But in my mind, I would like to prepare my mind for the eventuality of maybe going to the election day low. So mentally, I would like to be prepared that tomorrow, if the market breaks this and all hell breaks loose and there is 10-20,000 crores of selling by FIIs for a week, we will potentially reach somewhere here. And that probably for me right now is the worst case scenario. I mean, this is all basically just my speculation. Um, but that's where my, mentally, I am comfortable if market goes here. Let's put it this way. So we need to model out eventualities in our mind before they happen, because you don't want to be surprised. Because when you get surprised, you take actions which are not according to your strategy or not according to your rules, and that's what distinguishes between mature portfolios and portfolios which are run with ad hoc decisions. So this is something that you should also consider in your mind, that you know we've had some good runs and now it is time to give back something, and these are the scenarios that are playing out in your mind right now. It's always good to look forward and do that. Now let's also look at the weekly chart. The weekly chart since November 2023 was making higher highs, higher lows each time. And this low that we had in November, this is now the most recent sort of low that we had. And we are yet to break that. And if we break that, there will be several algorithms or rule-based strategies which will get triggered. And once they do get triggered, there will be more bloodshed that happens. So this is the sort of you can say the most optimistic situation, that we don't break this low and we consolidate here and try to revert back from here. That's where we are in the weekly chart. If we see the overseas market has also, S&P 500 in particular, has also started to come off, but nowhere near as bad as where we are right now. And I think one of the key reasons for all this is also the dollar index. The dollar index is strengthening like crazy since Trump was likely to come into office, and then he got confirmed, and now he's actually going to be in office. So dollar index is going up very, very strong. It is causing USD INR also to fall dramatically. In a lot of narratives, people have already thought that USD INR should be in the 90 to 95 range. And the fallback of that narrative is that if everybody is expecting USD INR to be in 90-95 range, then why should any foreign money invest at 86? They would rather wait for 90-95 to happen. Why should any NRI, for instance, invest in real estate at 86? He would rather invest at 94-93. So this is causing a delay of any buying decisions also from non-INR based investors. I think that is detrimental to our markets for that time period till we find some stability of the USD INR. So I think if we have to go to 90, it should happen quickly. And this trickle down impact of 10 paisa per day is actually harming us more, in my view. The last 1 week we have seen, or let's go for a month because this is a monthly meet. We've lost 12% on Nifty Next 50, 5% on Nifty, and 6 to 8% on mid and small cap indices. Now, while this is not pretty at all, but we also need to see the context where we are coming from. So if we see a 1 year perspective, in the 1 year gone by after this fall till yesterday, we are still up 19.6% on Nifty Next 50, 8.9% on Nifty, and small caps and mid caps are up 17% or so. So the markets have to seen with the perspective of, you are in the market for 5 years, 7 years, or whatever time period, and the last 1 year is still green. The confidence of most players will start to weaken once the last 1 year becomes red. That is usually the case where retailers will really panic, and this domestic flow that we are seeing will also can also sputter a bit. So we are a bit far from that situation, at least as of now. And I think a lot of folks, when I interact with them on Twitter or otherwise, are becoming very despondent, are becoming very demoralized. I think they are looking at the market with a very short-term perspective. And if you are in the markets, you cannot have that short-term perspectives with a longer-term strategy. You can have a short-term perspective if you have a short-term strategy. If you're doing day trading, if you're doing overnight trading, then in a 3-month period, in a 6-month period, if you're not making money, you should be despondent. But if you are in strategies which are holding stocks for 6 months, 1 year, you have to go with the cycles of the market, and 3 to 5 years is sort of the minimum cycle that you need to look at. And we may just be in the first part of the down cycle, so as to say. So you will need a lot of patience, but there is enough history to suggest that all kinds of down cycles, even when 2008 happened, where we lost 70% plus on Nifty, or 2020 crisis where we lost 35% on Nifty, have been smoothly taken care of over time. If we go and see 5-year annualized returns, this includes the COVID fall. We are still sitting very pretty despite the worst case scenario that could have happened to the market or to the world in the last 100 years. We are still sitting pretty on that. So we must have a more global context, global in the sense more macro, larger context of when we look at the markets, and short-termism should take a backseat, at least for strategies that are not geared for short-term. So this is a few slides that I wanted to show you. These are also available in the Good, Bad and Ugly weekly review this week. Additionally, gold has closed at a new all-time high in Indian rupee terms at 78.94 this week. The weekly close is the highest. So do allocate a significant amount, not 1, 2, 3, 4%, but good chunk into gold gradually. I think this is very essential for non-dollar denominated geographies and investors. This is the only asset which is globally priced and which will save you from a poor rupee if that has to happen over a period of time. So I think with that small intro, I will open it up for questions, and we are starting at 11:13. So let's go with questions at 11:13 and onwards. So I will not be able to take specific stock queries. So I would think don't do that. Anupam says, in this volatile or downward market, how do you scrutinize the market to stay invested in momentum rotation strategy? Apart from price, what is the other indicator that we need to? You don't need to use anything else. You need to shift out or sift out those stocks that have any regulatory red flag on them. So if SEBI or exchange is putting a red flag on some stocks, don't consider them in your portfolio or the basket of portfolios that you are choosing from. Other than that, price is more than enough to select stocks and to remove stocks in your uh, uh, portfolio. Richie, sorry, no specific stocks, please. Ayush says my portfolio is down by 17%. What to do? So why are you worried if your portfolio is down by 17%? Nifty was down 72% in 2008. We still made 4x from that point, from the highest point in that. You need to understand that you're taking on investments in the market which you are expecting to give you multiple returns over 4 or 5 year period. So you can't have the cake and eat it too, right? I mean, you have to allow some risk. You are accepting risk when you come to the market, and when the risk actually happens, you can't run away basically. So as long as your strategy, I don't know what strategy you're using, but if you are using any strategy which is self-healing, self-correcting, over a period of time, you will make money. I have no doubt about that. Good morning, Harjeet ji. Well, with SEBI's new RA restrictions, what is your take on the industry's future? Curious about weekend investing plan. Heard many are shutting shop. No, sir. No such plans for shutting shop. Some of the new RA restrictions that have come out have been, in my view, not really thought out. The Association of RA is taking it up with SEBI for a review, and I am very hopeful that some of these new guidelines, these are guidelines that they have come out with, will get reviewed. So we will have a clear picture in maybe another few weeks. And if that were to happen, the main key guidelines that have come out have been that, don't take advance fee for 1 year, take advance fee for 3 months. What we have represented to the regulator is that we as in many RA license holders are in the business of long-term investing. Now, when you are in the business of long-term investing, you would want people to stay with the strategy for longer terms. And by restricting them to charge only for 3 months, you are in a way enforcing or forcing people to look at a short-term view. So I think the regulator will look at that and rationalize that point. In the worst case scenario, if it doesn't, it really does not matter. It depends upon how you look at the market. If you are in your mind a long-term investor, the fee of 10,000 rupees, whether it has to be paid once or whether it has to be paid in four tranches, that it makes really no big difference. But we want the regulator to appreciate this point, that not everybody in the market is a short-term research product. Like many intraday products are there or overnight products are there. So they are in a different league. Model portfolio providers, long-term investors, long-term portfolio providers are in a different league. So nobody that I know is shutting shop, but yes, we are in talks. Rachna says, should I remain invested in MI Evergreen even if market is falling? I have a long-term vision of 2 years. So Rachna, there is no need to think that you should get out if the market is falling, because we don't know. The market may have bottomed yesterday and the market starts to go up from tomorrow. What will you do in that case? So we have to get out of this view that we can time the market and we can get in and get out. If you need the money, if you had to go out of the market, of course you must go out of the market. But if your vision is to stay in the market for long term, and 2 years in the market is not really a long term vision, 5 years and above you can say is long term in the market. 2 years is still, I would say, not as long term, because market cycles take time. For instance, in 2008 when the market peaked, it took 5-6 years for that peak to be reconquered. In 2020 when the market peaked pre-COVID, it took only 6 months for the market to conquer that. So it depends from cycle to cycle, but for a safe sort of a journey, if you have a 5-year cycle and if you are gradually bringing in your money over time, even if market don't make a new high, you will still make a significant amount of money. So from a market perspective, there is no need for any worry, because falling of the market is a feature of the market. See, you need to understand that market will go up and market will go down, and that is a feature of the market. You can't escape it. Nobody in this world, no investor in this world can escape the market from coming down. What we can escape is when the markets are coming down, we get out of the distressed bleeding stocks and get into more robust stocks. That rotation should happen. That is the best we can do, and that is what one should do. Beyond the market, of course, asset allocation, whether how much you are putting in equity, how much you're putting in gold or other assets, fixed income, real estate, etc., that should also happen. So as long as you're doing a equity allocation in a portfolio which can take care of itself, and an asset allocation which can take care of the volatility of the equity, nothing else needs to be done in my view. And this is not just for this question, but many such questions that may be there. Manish says, in this market, how are you managing momentum portfolio? We are managing it the same way as we were managing it at 26,000, as we were managing it at 12,000. There is no change. Why should your approach to the market change because of some levels? And this is not just momentum, even for others. I mean, let's say somebody is a value person, then at 26,000, if they were not seeing value, at 24,000 also most of them will not see value, but they will still start to buy that. So okay, let's not get into that part of the market, but there is no change in our thoughts. We are managing the momentum portfolio like any other week, any other month. Karan Doshi says, I understand that all your strategies were created at least a few years ago. How often do you review the algo to see if it's still working or relevant today? Sir, our strategies were started in 2016-17 for the public. They were running live since many years in my own portfolio. They have been tested over decades of price behavior. And I see nothing much has really changed in the human psychology towards the market, at least in the time frame that we are talking about, whether it is monthly or weekly. There have been some changes in high frequency algorithms, but nothing really has changed in the cash markets as such. So there is no real need for like a lot of folks do this, constantly they will change their strategy, or they will try to do curve fit of the last few years and update their parameters. I think that is a disservice to the strategy, because then there is no one strategy. It is basically jumping from one strategy to the other, which is looking good in the last 2 years. So we certainly don't do that. Bhavin says, to check the momentum score, it is difficult to add 30 stocks individually with its quantities. Can we upload entire holding in Excel at one go? So right now we don't have this utility. You can understand that we are a very small team managing a lot of things. So we really don't have the bandwidth to create a upload. If any of you are willing to chip in with your tech skills, we can certainly do that. Karthik says, I'm starting momentum investing. How should I devise enter and exit strategies for stocks? We will tell you when to enter and when to exit. You really don't have to do anything. Prateek says, is more fall expected? As I mentioned in the introduction, I am expecting that this recent low may not get broken, but that may be my bias. So if that recent November low gets broken, then yes, more fall is likely to happen. So that is sort of my trigger point in my mind if more fall has to come. Spurti says, when gold and Nifty gave the same returns, why should we prefer investing in the market? I have been saying so for the last 9 years, that gold needs that space in your portfolio. You need not replace your equity investing with gold, but put gold right there along with your equity investments, because gold will give you that hedge. Right now, for instance, gold is at its highest, Nifty has or equity has come down. Portfolios which are well allocated in gold have not seen much of any fall. That is the beauty of the hedge. So when equities are doing, a complete exponential move up, those portfolios may lag. They will not do as well as that. But you can't have the cake and eat it too. So you have to decide what you want. You want highest returns and the highest drawdowns also, then pure equity. You want a balanced mixed returns and mixed drawdown, go with equity plus gold. You want even lesser volatility, go with pure gold. Don't look at equity. So you have to see where in the spectrum you want to lie, and all options and the combinations are available. Ishan Jain says, is there any plan to launch PMS or AIF services in the near future? So we are getting this question a lot. A lot of folks want to have a momentum managed portfolio. So in 2025, we are thinking of going forward on at least a thought process whether we can do this or not, because we'll need a lot of expansion of team for this. So this is certainly in the mind, but nothing certain is there yet. Ayush, we've already taken that question. Can you please provide your view on PSU banks in general? So PSU banks, I think, let me go to this slide that I have on Nifty sectors. So PSU banks last 1 week are down 8%. Let's go at 1 year. So last 1 year, PSU banks have done 6.9. Last 6 months, PSU banks are down 15%. Last 3 months, PSU banks are down 7.5%. So I don't see any leadership by PSU banks in this space. And in fact, I think PSU banking index is below the 200 DMA. Let me also show you that if I have that. Yeah. Yeah, PSU banks index, there's no PSU bank above 200 DMA. No stock in PSU banks are above 20 DMA, 50 DMA. None. So PSU banks are at that, really poor situation where at least momentum will not touch them at all. So that's the view from momentum side. Raj Jain says how your momentum strategy handles volatility, as volatility can often create false alarms to show stock in and out of momentum. So sometimes it will happen that you will get into stocks, but then you will get booted out, and that can happen. And that has happened many times in the last 8 or 9 years that we've been doing this publicly. But it always gets resolved once we have some good trends. So I think no need to worry in terms of how the strategy will handle. I think that model is well proven that if you will have a strategy where you will stay with the winners, you will make money. The only reason why some portfolios bleed and bleed deeply is because of emotional reasons, that people hold on to stocks that they were not supposed to hold on to, or they will concentrate their investing in some stocks that they were not supposed to. And it is essentially a human driven error which causes underperformance in most portfolios. All rule based strategies which are self correcting healing in nature, self-healing in nature, will go through some drawdowns for sure, but they will self-correct and go up. It all depends upon how the cycle will play, and it is not like that momentum, like this false belief is there that markets, when they're down, momentum doesn't work. Well, what works when market is down? How are value stocks doing right now? Asian Paints is down 25%, HUL is down, ITC is down, Reliance is down. What is working right now? What is working is the strength within each of the pockets. Some stocks, like for instance, I'll show you. Yeah, this slide itself, you can see 80% of stocks in IT are above the 200 DMA. So IT stocks are working right now. Pharma stocks are working right now. Some services sector stocks are working. Some private banks are also doing all right. So these are, the ways in which you can save yourself. If you stick to one stock and say, okay, I want to make my entire life's money out of this stock, it doesn't work like that. It works for some people sometimes, but that is not a norm. That is trying to find the survivorship. You talk to 10,000 people, they will tell you their best stories. And you will feel that, yes, sticking with one stock for 20 years is a great idea. But you do it once, at the end of 20 years, if you find that your combination didn't work, you're already 50 plus. And then you have another 20 years to go for your next try. I certainly don't think that's a good idea. Okay. Next one. Sarang says, does it make sense to continue SIP in MI20? The drawdown is 15% for more. Yes. When the drawdown is 15% or more, you must set aside more money towards the strategy and ride that bottoming out process. It may go down even further, but don't worry about it. Just keep sipping, because that is the only way you will enter earlier for the next set of winners that is going to come in the markets. Abhinav says, where do you get the charts which you show in your videos? So I use TradingView, and some of the charts that are made by my team happens on, you can see here, Data Wrapper. This is one utility that we use. Historical shorts says, I am buying on every dip. That itself is a very contradictory name. If you are historically short, why would you be buying on every dip? But anyhow, so I am buying on every dip. Should I wait or keep adding my mutual fund units? Keep adding. Keep adding. Why you want to wait? You should keep adding. Mutual funds are like self-correcting mechanisms of instruments. They may have poorer returns, but that's okay. The fund managers there are also sometimes good managers, and they can help you with riding out the bottom. No harm in that. Ganesh says a lot of books support index investing for 15-20 years, as 95% of index beats active funds. Is it applicable only to mature markets like US, or for India also on a long term? So this is a strategy that has some pitfalls. Pitfalls in the sense that there could occur a Japan where you may see index go up many times in a very short period, and then it doesn't do anything for a decade or 2 decades. So index investing has that problem. It may not happen in India, or it may not have happened in the US. But if you go and see the US history for the last 100 years, there have been a couple of occasions where the US index did not make a new high for more than a decade. So it is going to get very extremely frustrating if you reach that point where index does not give you any return for a decade. That is the problem with index investing. So the next best of index investing, or the better strategy than index investing, is to do a momentum portfolio based on the index, so that you will always remain in the strength part of that index. So we have done several studies on this. Several of our portfolios run on this. So this is the way to be active yet be in the index stocks. I think that is the key of not getting stuck with a stagnating index at any point of time. Jay says moving from stocks to ETFs will limit the drawdowns. Depends. I mean, if you have 30 stocks in your portfolio, maybe that is also like a basket. But if you have concentrated stocks in your portfolio, then yes, moving to diversified baskets will limit the drawdown to some extent, I would believe. Manish says, what is your view in investing in Nifty or BNFBs during this downfall? It depends upon strategy. If you are having a strategy of Nifty Bs, accumulating Nifty Bs at every fall, that is fine. I mean, Nifty, again, as the previous question, as long as Nifty keeps going up, accumulating Nifty Bs over a period of time is always going to be a good strategy. If Nifty decides that I'm not going to move for the next 5 years, then that may not be such a good strategy. Neeraj says, don't fear in mutual fund portfolio, but worry in short-term share purchases. Should we shift completely? I think this don't fear in mutual fund is a confidence you get because it's a black box. You don't know what's happening inside. So the decision to move or not will be entirely yours. But to have that confidence that mutual funds I will not have a loss, and in direct stocks I will have a loss, that's completely misplaced. Vignesh says, while backtesting plain ROC 1 to 5 on monthly rebalance, the 2000-2009 strategy went into 70% drawdown. What are some parameters we could add to avoid drawdowns? Thanks for getting us into momentum. So you can add some, maybe a let's say some indicator which cuts you off from the market beyond a certain point. Let's say you decide you have a rule that if the index drops by 40%, I am out of the market. Then your strategy will not go to 70% drawdown. So it all depends upon the design of the strategy. Maybe you can design a strategy where you say, if my capital goes down 20%, I am out of the market. I will re-enter once XYZ happens. So no one way of doing this, but yeah, this is. I mean, if Nifty goes down 70% in a year, how will you protect yourself from not going there? And if you say, I'll cut myself off at certain point, then you may get some chop offs. Like, in COVID, you may have gotten chopped off at 30%. You may be out of the market for 6 months. Market already went back 40%. Then you'll enter at that point. So the common mistake that most people make is that I want the upside, but I don't want the downside. It doesn't happen like that. MP Jagan says, does a momentum investing strategies remain unique to a particular index and the same strategy will not work on any other index or basket? It can happen that way, that each index may have some unique combination of how it moves. So Bank Nifty moves very differently from Nifty. Nifty moves very differently from Nifty Junior. So there are some peculiarities about each index, and your strategy could be tuned towards that. Like, for instance, to give you a very crude example, many cars are there with the same engine, but different tuning. So some may have higher torque, some may be geared towards more fuel efficiency with the same engine. So the engine and momentum engine remains the same, but it could be designed or tweaked to suit that particular requirement. Jay says, good time to start investing in momentum ETFs like Nifty 200 Momentum 30. I would not know the answer to that. Harshad says, can you consider live rebalances? That is exactly at 12 noon, because on rebalance day, if any stock 3-4% up or down, the logic behind rebalance may become invalid. No, so this is a general common belief that many people have, that if stock is up 2%, 3% or down 2-3%, then they are moving away from the model portfolio. That is not the case. The way the model portfolio performance is calculated on the small case platform is by taking the average of open, high, low, close of the rebalance day. So if we are pushing a rebalance, let's say this weekend, and you are executing it on Monday, then Monday's open, high, low, close of that stock will be taken, and the average of that will be taken as the buy or the sell price. And over hundreds of transactions over the years, there will be no material difference between the model portfolio and your price, because sometimes you may be buying above this average, sometimes you may be buying below this average, sometimes you may be selling above this average, sometimes you may be selling below this average. So it makes materially no difference. Over the last 7 8 years, we have found no difference at all over for longer periods, once portfolios have been run for longer periods, for any discrepancy between model and the actual portfolios. Any material difference is not there. Capital market index is down 10% in just few weeks. What is your thoughts on capital market index? So I think the capital market stocks like CDSL, BSC, or some brokerage stocks have been hit hard recently because of some narratives that, like for instance, Zerodha chief came out and said that, the best is past us, or the SEBI new regulations causing FNO volumes to collapse. So I think the capital market stocks may have a tough time making a new high in at least in the very near future. Do you think we got a pre-budget rally? No, we've not got any rally. We in the last week of January we hope to get a pre-budget rally, but so far nothing. Niladri says, when will the market bottom? Nobody knows this answer. Pre-budget, I don't know what that means. Sudarshan Tomar says, did we miss out on a midweek rebalance opportunity and moving to cash? No, sir, we have not missed out on any opportunity. The only opportunity we have missed out is basically not succumbing to market moves and staying with our rules. So all strategies are being watched for their rules at all times, and while in the hindsight we can say we should have gotten out last week, the 7% fall this week could have been avoided. That is not an opportunity, that is a hindsight view. We could have all gotten out at October 2024 and be sitting in cash till now. That is not an opportunity. Gopal says, I'm planning to invest in junior Bs at 22,500 levels. Once reached, I will pledge and do iron condor for the next few months, as I'm expecting to stay sideways to bearish. Your inputs, please. I have no idea how iron condor will perform in these market conditions, so I cannot comment on this. Investor guy says, your opinion, momentum factor based index funds, please. I think the biggest problem with index fund momentum factor ETFs or mutual funds is that their rebalance frequency is 6 months. So that is a hell of a long time to wait to take a decision on the portfolio. I certainly will not touch momentum portfolios with 6 months rebalancing. Jay says, great fan of your work. Thank you very much. I've been adding Nifty Bs in small portions since the fall started. It is a good idea to continue adding in it or wait for election lows or do a lump sum that time. I will not be able to comment on this. Nifty Bs, while over a very long period has done well, there is no assurance that Nifty Bs continues to rise in the shorter term or the mid-term. And this is basically a tactical play that you're doing for election for budget or election lows, etc. So, I mean, it's a tactical play. You can put some stops and try to accumulate and see. Wanderer Lucky says at the current level, should I invest lump sum in gold ETFs or invest it gradually? So, in general, I would suggest any investment to be done gradually and not in lump sums. Okay. Your views on silver, has it got better prospects than gold? I think silver is very volatile. It is a poor cousin of gold. It is not accumulated by central banks. It has no value versus gold in the minds of the central bankers and monetary system. So it is like any other good commodity, which will flare up once in a while. So silver being very volatile should be handled with limited leverage, but the chart currently is looking good. On monthly rebalance subscriptions, are we rebalancing on 1st Feb or would be decided after the budget? So budget is on 1st Feb. So we will basically take a call at the end of 1st Feb. So Saturday night is when we will push the rebalance. Saturday night or Sunday night, and you will have it on Monday. In momentum report investing side, GTL Infra showing stronger by 81 score. Is it true? Please send us a screenshot. We will get it checked from the backend. If there is any error, we'll get it corrected. On monthly rebalance, this is already done. Ayush says, why to follow an indicator? All indicators react to price. Bhava Bhagwan price is the only truth. I totally agree with you. In any strategy that we follow, we are not dependent upon any indicator. Indicators are basically good if you are not watching price, but you want some average or some, a packaged price move. So maybe an RSI is giving you a packaged price move, whether the price is moved into overbought, oversold, or a moving average is telling you an average of the price. So everything is a derivative of the price. Price is the ultimate god, no doubt about that. Vishwajit says, is it the right time? It's always the right time, but don't sell your house and jump into any asset. Accumulate it over gradually. Rahul says, I am currently trading dual momentum investing strategy and Nifty mid small 400 and gold bees is my new universe. Would you recommend to diversify money across different factors? I certainly would think that momentum is good enough for your focus, but if it gives you more comfort, certainly diversify money across different factors. Which were stocks which were in momentum? Satinder is asking, when rebalanced in strategy leads to losses booked, whereas now value stocks like FMCG appear to have bottomed out. Shouldn't these be considered? So yes, strategies which are value oriented will consider them. Strategies which are momentum oriented will not touch them. We will touch stocks only which showcase that they are willing to go up. Just because Asian Paints is down 25% makes me, it does not make it a candidate for me to buy it. A value manager, however, may find value in it, although I find most FMCG stocks are still crazily overvalued. But, that's not my game. Rahul says, where can we find how these momentum strategies work and what are the technical parameters to pick stocks by weekend investing? You can come and loot my house and my laptop, and maybe if you search through that, you may find these secrets. Vaibhav says, how does investing in momentum index based mutual fund work? Everything works. It all depends upon how good it works. So if you find any mutual fund which is doing better than, let's say, active momentum strategies, please go ahead and invest there. Yash says, should I invest now or wait for the budget? It depends upon your goal. If you are punting to make a short buck, then maybe we'll get a pre-budget rally. Or if you are investing for the long term, then it doesn't matter whether you invest or you invest up to the budget. What time frame do you look to decide when a stock has lost momentum? Daily, weekly, monthly? So most of our strategies are geared towards weekly and some are on monthly. Significance of Sharpe ratio of momentum portfolio. You can do all kinds of statistics, but at the end of the day, we look at ROMAD ratio, which is somewhat of a same significance as a Sharpe ratio. It really does not matter. I mean, as long as you are in the right pocket of market cap that you want to be at, I think that is good enough. That if you are distributing your assets across different market caps and are allocated in other asset classes, I think getting too statistical about ratios and investing accordingly, I have not seen many people really succeed because of that kind of positioning. Karan says, my age is 38. I have 20% allocation to gold. Congratulations. I can say that my portfolio has fallen less than the market during this fall. Certainly, you would have got the benefit of gold, for no doubt about that. Srikar says, is it possible to upgrade from all cap to HNI? Certainly, you please get in touch with our team. They will, as the next where they open for HNI, they will inform you, and they can also help you, get a refund of the unused portion of your all cap if you move from one to the other. Ved says, how should one approach investing in real estate? Please share some guidelines. This is, I think, a very, very broad question, but my view on real estate is very different from a lot of equity folks. I think real estate is very, very important. Even if you are not able to buy real estate that you want to buy, whatever allocation you can do to real estate realistically without getting into too much leverage and all that, you must do. So if you have 20-30% allocation towards real estate, I think that's not a bad thing to do. If you don't know where finally you will settle, you can still buy something in the city you are or in the city that you would want to be. If you eventually think you will go to a 3-bedroom, but you don't have the money for it, you buy a 1-bedroom. Having your feet dipped in real estate, even if you're not going to live there, I think is a important aspect, and one should do that. But everybody has very different views about real estate, so I won't press more on this. Surya says, what is your opinion on Ambuja Cements? No, I will not be taking individual stocks, please. What's your view, Anshul says, on unlisted space to generate the alpha? So unlisted space can really generate a lot of alpha. There is no doubt about it. But as they say, there is no gain without any pain. So you could get a lot of gain, but you could get a lot of pain also. So it all depends upon if that money can be set aside for 5-10 years, without liquidity, without access to, of course, no exits because of no liquidity, but no information as to what is happening inside, and all those kind of associated things. So if you are good with that kind of mind frame, certainly unlisted should give you more alpha than listed. But then again, you need to distribute your. I know several people, for instance, in my friend circle, who invested in unlisted space crores of rupees and have now stopped it and just forgotten about that money because it didn't do well. So again, it all depends whether you get a multi-bagger. You invest in 10 and one of them should become a huge multi-bagger. Otherwise, it's a waste because 80-90% companies will close down. Kiran says, why is Mafang and Mont 100 stable in this volatile downtrending markets? Any specific reason? I don't follow these products, but uh, I am presuming that some of these are stable because they are, of course, investing in the US market, and US market has been strong, but also because RBI's regulation caused no further investment possible in these instruments, and there was a premium that got built on the NAV. So even if US markets are coming down, uh, the premium that has already been there, I think the premium is still getting maintained there. That's from what I've heard and read. I'm not very sure about this, so don't take my word on this. Uh, Mr. Dave says, what is your view on ETF on central PSEs? My view on thematic PSEs is that one should stay away from them. Themes keep changing in the markets. Unless you are having a strategy how to move in and move out of those themes should be avoided. But unfortunately, thematic portfolios, thematic ETFs are the best selling ETFs or mutual funds in the market because they give the highest commissions to the agents who push them and sell them, and that is why they are in the top position above all other categories of mutual funds that are getting sold. Same for energy sector also, ETFs, etc. But energy sector has not been doing well. Energy sector, you can see here in this chart, uh, the percentage of stocks above 200 DMA is 0. So energy sector is down and out for now. So from a momentum perspective, I would not look at them. Anil Vagasia, I'm sorry, says, how many years prefer to backtest any momentum investment strategy? A decade is good enough because in each decade you will find you'll have one or two major bull runs, one or two major crashes, 1 or 2, 3 years of complete listlessness. So any one decade is good. In the last one decade, however, you only had the COVID crisis, but that one last decade is also good enough in my view. If market remains in volatility for long, how do strategies like MI20 with absolute movement will limit drawdowns? I don't understand this question. MI20 is actually a rotational strategy. It will stay with the strongest stocks in the mid and small cap 400 index. So if market remains choppy, MI20 may also remain choppy. How much do you make from YouTube? So our purpose on YouTube is not to make money. That is for sure. However, we ran the YouTube channel for a couple of years without ads, and our channel stopped growing. When we discussed with experts why our channel is not growing, they said because your ads are off, and the YouTube algorithm will not promote your YouTube videos because you are not giving them anything. So we put the ad switch on in terms of the monetization on YouTube, but that money that comes from YouTube probably is less than 0.5% of weekend investing revenues, or maybe much more less than that also. So it is not the revenue from YouTube that we are looking for. So Arjun Badiva says, please, how to send you my stocks for momentum analysis. So please go to weekendinvesting.com. Let me just show you also. So give me a second. I'll show you how to do this. Okay, you can go to weekendinvesting.com. You will see a momentum report here on the top. You go to the momentum report, you go to analyze your portfolio. and you just start to put your stocks in um, here, and you know and you can mention the number of shares that you have, and you submit with your name and address and email, and get report, and you'll get a PDF report on your email. Ankit Goyal says your view on mid cap stocks in the next 3-4 months. So, as I mentioned at the beginning, uh, the indices, most of them indices are currently in a downward trending mode. In 3-4 months, I would expect that we would have made some kind of a bottom, but I am not right now sure that the market will recover back to their new highs in the first half of 2025. Uh, it may happen, but right now it doesn't look like that. And if you honestly ask me, I'm right 50% of the time and I'm wrong 50% of the time. So to that extent, have that view with that disclaimer. Um, Media chart is no chart to see. It is just constantly going down. You won't find anything there. So Rajesh says I've subscribed to what is the time? Sorry. Okay, it's exactly noon. Last question. Subscribe to MI Evergreen, but SIP amount exceeds 2.5 lakhs, which is not feasible on monthly basis. Please advise how to modify the SIP amount. So you collect your SIPs and invest more once every time you are able to collect the SIPs. That is a better strategy to SIP every week, etc. The SIP amount is not 2.5 lakhs, but the maybe the minimum amount to start with is 2.5 lakhs right now. So this is all I have for today. I'm sorry if I've not been able to take more questions. I think we've taken a lot of questions today, but certainly every time we do miss out on all the questions. And if there is any burning question that requires immediate attention, do let us know on chat or email, on Twitter, anywhere where you can find us. We'll certainly respond to it, email being the best. And it was a great monthly session to have with you. We'll continue to have these. Do keep sending us your love and your suggestions. We are really motivated when you suggest things to improve our services, to improve our connect with you. And we do whatever we can to make sure that you have a very comfortable and worry free investment journey. So that's all I have for today. Thank you so much, and I'll see you next month.